Hey guys, welcome back to Reserved Investments on YouTube. On this channel, we cover a lot of markets in the antiques and collectibles trade. And all these markets in the antiques and collectibles trade, it doesn't matter if we're on the antique side of the equation, we're talking about rare coins, we're talking about historic Chinese Ming Dynasty vases, or even if we're talking about pop culture collectibles like Magic the Gathering, Pokemon, Marvel Universe trading cards, comic books, vintage toys, and the like. All these markets have one thing in common. They are all speculative, and for the most part, they are all unregulated. Now, this is what makes the market for antiques and collectibles in the year 2021 so complex. There's a lot of people out there that are manipulating these markets. You don't have to go any further than YouTube to find this out. There's a lot of people out there that put out videos like the top 10 CGC graded comic books you should be buying right now, or the top 10 Marvel Universe trading cards to invest in the year 2021, or the top 10 cryptocurrencies you should be diversified into right now. A lot of these videos get 10, 20, 30, 40, 50,000 views in some cases. Me, here on Reserved Investments, I do not do hype-driven content. I am a contrarian in the trade. I am a contrarian when I talk about all these markets because a lot of people out there suffer from what I call Ponzi dreams. Not Ponzi schemes. By what I mean by Ponzi dreams is there's a lot of people that come to YouTube and they suffer from confirmation bias, meaning they seek out channels, they seek out content creators, they seek out information that matches their own viewpoints. Meaning, if you're pro Magic the Gathering, obviously there's a lot of channels out there that are going to tell you that Magic the Gathering is the greatest investment on earth. And if you put all your money in Magic the Gathering, you're going to go to the moon. Or if you invest in Pokemon, you're going to be okay. Just stay the course, put all your money in Pokemon cards, and over the next 10, 20, 30, 40 years, you're going to be rewarded for your efforts. Now, in my opinion, I'm going to be 100% honest. 80 to 90% of the people that are coming into the antiques and collectibles trade as starry-eyed speculators in the year 2021, over the long term, would do far better in a traditional S&P 500 index fund or a total stock market index fund. However, I don't get involved in what people want to do individually with their money. All I can do on this channel is show the cons and the pros of speculating over the short term in some of these asset classes and over the long term. And then we can apply it back to history, mainly history in the antiques and collectibles trade, like what happened in the 1980s with rare coins and coin grading, what happened in the 1990s with Beanie Babies, what happened in the year 2000s, mainly pre-2005 and earlier with pre-Nintendo video games and systems when that market was going haywire. So we have a lot of examples to show that these markets do not go up exponentially over the long term on average. There's a lot of market manipulation in these markets. There's a lot of speculation, and there's a lot of unknowns. Now, when we look at gold, when we look at silver, when we look at Bitcoin, when we look at cryptocurrency in general, believe it or not, these markets have a lot in common with a lot of the markets that I talk about on this channel that are in the antiques and collectibles trade. They too are unregulated and they're highly speculative. Now, I don't care who your favorite financial person is that you either worship or you listen to all their videos and or advice. Maybe you like Dave Ramsey. Maybe you like Susie Orman. Maybe you like Meet Kevin. Maybe you like Graham Stephan. Maybe you like Kevin O'Leary. Maybe you like Mark Cuban. Maybe you're more like me and you like Ray Dalio or more traditional asset guys like Warren Buffett. Now, whoever you go to, if you type in their views in a YouTube or a Google search engine on cryptocurrency, on Bitcoin, on certain asset classes, you're going to get both pros and cons. For instance, Graham Stephan has been very vocal about both the pros and the cons of investing in Bitcoin. Ray Dalio just came out with a statement saying that he thinks at some point the United States is going to most likely regulate Bitcoin, which would be a disaster for that particular market in general, which is really what I'm going to talk about a little bit in this particular video. Dave Ramsey does not like cryptocurrency at all. Now, this is probably one of the few talking points that I actually agree with Dave Ramsey on, because I sure don't agree with his political views. But that's the subject of another video that'll never get made. But on this particular talking point, my point is that if you are going to look for information on the pros and cons of cryptocurrency, you're pretty much going to get a plethora of different opinions, sometimes from the same person, because a lot of these people don't want to talk down about a particular asset class. Now, I'm kind of the same way in certain instances. For instance, if you come to me and you go, Sean, what do you think of Pokemon cards? Well, I'm going to give you the pros and cons of speculating in Pokemon cards and also investing in Pokemon cards over the long term and how I view that particular market. It's no different when we talk about gold, when we talk about silver, when we talk about stocks, when we talk about bonds, when we talk about real estate, or in this case, if we talk about Bitcoin. So let me start off by giving you what I like about Bitcoin first. Then we're going to talk about the cons. Then I'm going to answer the question, well, Sean, are you investing in Bitcoin? Do you have any of your portfolio invested in cryptocurrencies at present time? I will talk about that towards the end of this particular video. So let's start off with the pros. This is what I love about Bitcoin and cryptocurrency in general. First, mainly centering this discussion about Bitcoin. Bitcoin was created in 2009 during the great financial crisis as a way to create a currency out of reach of governments and detached from central banks and obviously the Federal Reserve. Now, I consider that a very positive talking point, especially in the year 2021, where we have haywire governments and the Federal Reserve just pumping cash to anybody who has a bank account at present time and meets certain requirements, which is pretty much what, 80%, 90% of the population of the United States. You pretty much meet those requirements, you're going to get free money. Now, this is very interesting in the year 2021 because we're seeing the end result of that, where a lot of that money is ending up in the stock market. It's ending up in the collectibles trade. It's ending up in the cryptocurrency markets as well. That is something to keep in mind, guys. A lot of these markets are being propped up with that money that is hitting these markets en masse. And now, another thing that I like about cryptocurrency is the fact that only 21 million Bitcoins will ever be created and or mined. So there is a finite, limited supply of this particular asset class, meaning a government can't come in and just create more Bitcoins, or an individual or the original creator of Bitcoin can't come back and say, oh, we're going to create another 20 million Bitcoins and we're going to throw them into circulation. This is not like the Fed. This is not like the central banks. There is a finite supply of this particular asset class, which I consider to be a good thing. Now, the thing that I'm most excited about when we talk about cryptocurrency and Bitcoin in general is the technology in which it is based on. When we talk about blockchain technology has many uses at its core. A lot of technological, medical, and data storage companies are all attracted to the basics of blockchain technology. I really think blockchain technology is going to revolutionize a lot of things, not only in a financial sense, but also in alternate industry uses, almost like what's happening a little bit with NFTs, non-fungible, love saying the word fungible, tokens at present time. We're seeing a lot of these interesting and fascinating gimmicks where people are creating artwork out of NFTs and they're selling for godly sums. I mean, we're talking $70 million in some cases for some of these works of art that are contained in NFTs. Now, I did do a video on that. I am not a fan of NFTs, even in the collectibles trade, but I do see the promise. I know a lot of people are talking about, Sean, what happens when Wizards of the Coast or Hasbro or the Pokemon Company or Nintendo starts to create NFTs based on their products? Do you see the potential? And unfortunately, as a collector at heart, I do have to say yes, I do see the potential for a lot of people flocking to those particular limited type assets that they can either flip on the secondary market, trade, and or just own and covet. So I do see the collectibles trade going in that direction at some point in time, Whether it will be just a passing fad or whether it takes hold, that's something that we can discuss as it gets closer. Right now, I really look at NFTs as the next fad that we're seeing in the year 2021. Now, this brings me to start talking about the cons of Bitcoin and cryptocurrency in general. First of all, as we've already seen, the price of any unregulated speculative asset can be manipulated. There's a book in the background of this particular video that does talk about market manipulation in the antiques and collectibles trade that was written back in the 80s by Harry Rinker. It is a very hard book to find right now, I am told, but that particular book does go into details as to how some of these markets can be manipulated. You can apply those same tactics to gold, silver, cryptocurrency, and yes, even Bitcoin, because the market fundamentals and dynamics are all the same. Anytime we talk about an unregulated speculative asset and or speculative market, those markets are ripe for price manipulation. Now, another thing that I don't like about Bitcoin, there's a lot of people that love to argue with me that Bitcoin is a currency, where I argue it is a commodity. Now, if you want to hear my standpoint on this, why I think Bitcoin is not a valid alternate asset currency at present time, I'm going to explain it by using this example. You guys know that I love Mercedes. I myself drive a Mercedes CLA 250. Now, in the next 2 years, I plan to buy another brand new Mercedes, meaning I will trade my C-Class Mercedes in and I will get a brand new Mercedes off the lot. Well, let's say that tomorrow I want to call up my Mercedes dealer and I say to them, hey, I'm thinking of coming in. I want to buy a 2021, 2022s are almost out, brand new Mercedes. I want to come and test drive it, but I just got one question. Would you be willing to take Bitcoin for this particular transaction? And let's say, you know what, Sean? Yeah, we just started accepting Bitcoin for anything that you want to buy at a Mercedes dealership. Meaning if you want to pay for parts, labor, service, and or the actual cars, we'll accept Bitcoin. Now, in all actuality, this is yet to happen. Tesla has started to accept Bitcoin as a payment for their vehicles, products, and services. Mercedes, to my knowledge, has yet to start doing this. But let's assume that they did. So let's assume that I'm going to rush to the dealer and I'm going to want to buy a brand new Mercedes C-Class. So I go to the dealership and I tell them, this is great. I checked this morning before I came. I own one Bitcoin and that Bitcoin is selling for $50,000. Incidentally, the brand new Mercedes C-Class that I have my eye on, it also sells for $50,000. So this is great. With taxes and everything, I can pretty much just do a flat out trade for my one Bitcoin and I can take that car and I can drive it off the lot. So I get to the dealership, I tell them my plan and they go, that sounds great, Sean. Would you like to take the car for a test drive? And I say, you know what? I do want to take the car for a test drive. So let's get me slotted. Let's get me out there on the road with it. And 30 to 40 minutes later, I come back to the dealership and the guy goes, how did you like the test drive? And I look at him and I go, the test drive was great. I'm ready to sign the paperwork on this car. So I pull out my trusty pen. I'm ready to sign the paperwork. And the guy looks at me and he says, I'm sorry, sir. You know, we looked at the price of Bitcoin while you were out in the test drive. Bitcoin just dropped to $45,000 a coin. So now, if you want to buy this brand new Mercedes, even though you've only been at the dealership for an hour and a half, you're going to have to pony up not only that Bitcoin that you have, but you're also going to have to write us a check for $5,000 to make up the difference for the fact that in that hour and a half, Bitcoin went from $50,000 to $45,000 per coin. Now, does that sound like a unit of currency that you want to put your trust in? No, it does not. That's why Bitcoin is more of a commodity than that of an overall currency. It is too volatile, guys. This is a problem that I have with Bitcoin that most likely will never be resolved because a lot of you guys that are speculating in it, you love the peaks and valleys that makes up the Bitcoin secondary market. That's how you invest in it. You're happy if Bitcoin goes from $50,000 to $70,000 a coin just because you happen to own it. Now, if you're somebody that's buying it though, and you see these big price swings, you're going to be like, wow, well, if I invest in Bitcoin at $50,000, $60,000 a coin, what happens if it drops to $30,000? That is the inherent risk of investing in Bitcoin. This is one major reason why I do not like Bitcoin. Now, another thing that most people don't analyze when they look at Bitcoin, and I was really glad because Ray Dalio just came out with a statement on this, claiming that eventually, most likely, the United States is going to regulate Bitcoin. Regulation is a massive risk when we talk about Bitcoin. If you go back to the 1930s, my favorite president of all time, FDR, he outlawed personal gold ownership to try to stabilize the currency, the monetary system that we were using at that particular time, because it was linked directly to the gold standard. Now, this is a major risk when we talk about Bitcoin, because one of the things that I really don't think that people are aware of is with the advent of blockchain technology, in my opinion, and a lot of economists' opinion, it is only a matter of time before one of either the central banks or the Federal Reserve or even another country starts to create a digital currency of their own that they are going to utilize to try to either tie to the US dollar, meaning if it's the US government, or if they're a competitor of ours, meaning I live in the United States, so I always look at everything from the perspective of somebody who is an American citizen, so I apologize to all my world viewers right now. But let's assume that China comes up with a cryptocurrency of their own that rivals the US dollar. The US might retaliate and say, you know what? We got to create our own cryptocurrency to retaliate against what China's doing. This could have bad ramifications against Bitcoin and cryptocurrency in general, because what they're going to do next is they're not going to want any other cryptocurrency competing with that new crypto US dollar to the point where they're probably going to regulate it. A lot of you guys that are investing in cryptocurrency over the long term, let me say that again, over the long term, do not realize the tremendous amount of risk you are taking if that were to occur. And a lot of economists put that risk at greater than 50% at present time. India, if you want to look this up, you can. India is already trying to regulate cryptocurrency in general. Other countries are going to follow suit because one of the core uses of cryptocurrency right now is on the black market, meaning there's a lot of illegal activity that is being financed by cryptocurrency in general. Another thing that a lot of people don't seem to realize, I have a lot of people that love investing in gold, silver, and cryptocurrency. Well, look at what happened with the price of gold just in the last 12 months. Yeah, it came up a little, but then it went back down. Why is that? Because a lot of people that were investing in gold are now transferring ownership over to cryptocurrency, meaning they're selling off the gold and they're investing in cryptocurrency instead. So cryptocurrency is actually causing a negative price decrease in the gold marketplace at present time. This is not by accident, guys. It's no different when you guys reach out to me and you say, Sean, I saw a hype-driven YouTube video that stated that a lot of the people that are making tremendous gains in the trading card collectible market are going to start to get involved in comic book collecting. What effect will that have on the market? Well, yes, people only have so much money to spend, whether it's on collectibles, whether it's on discretionary items, or whether it's in investments. So as a result, that money has to come from somewhere and it has to go somewhere. For instance, if you spend $5,000 a month on Pokemon cards because you think it's the greatest thing in the world, and you start playing Flesh and Blood, and you really like Flesh and Blood, and you decide to take $5,000 that you were originally spending on Pokemon cards and put it towards Flesh and Blood, guess what? The Pokemon marketplace just lost $5,000 in sales. And a lot of collectors, investors, and speculators don't analyze these markets from that standpoint. There's only a finite supply of money being propped up or being injected into some of these markets, especially when we're talking about niche asset classes, which is what antiques and collectibles are, which is what Bitcoin and cryptocurrency are in general. Now, I know some of you are going to argue and you're going to go, Sean, Bitcoin has a market cap in the billions. I get that. I get that fully, guys. It eclipses a lot of the market caps in the overall antiques and collectibles trade. It does not eclipse Wall Street. It does not eclipse the real estate market. But when we talk about alternate asset classes, yes, you are correct. Right now, due to Bitcoin selling for $50,000 to $60,000 a coin at the present time, the recording of this video, you can argue that Bitcoin does have a massive market cap that rivals most collectible markets, and even in certain instances rivals the market for gold and silver. Now, this is fundamentally historic. We've never seen anything like this. But what I am going to tell you is I am not investing in cryptocurrency or Bitcoin at present time due to these reasons and due to the fact that I love income generating assets. What is an income generating asset? Stocks, bonds, mutual funds, ETFs, even real estate if you rent it out, all those particular assets, if you own them, they pay an income stream and you don't have to sell the asset to get that income stream. When you invest in collectibles, when you invest in antiques, when you invest in gold, when you invest in silver, when you invest in cryptocurrency or Bitcoin, if you want to take any of your gains out of that market, you actually have to engage in a transaction of selling that particular asset to make your money. When we talk about income producing assets, you don't have to do that. For instance, if I own, well, I do own 1,000 shares of Dow Chemical stock. We'll use that as an example. Every 3 months, Dow Chemical Company pays me a dividend for owning that stock. If I own an S&P 500 index fund, every quarter, every 3 months, the mutual fund company, whether it's Vanguard, Charles Schwab, Fidelity, T. Rowe Price, they pay me a dividend for owning that particular asset. And I don't have to do anything to get at that dividend. That's why I tell you guys, you cannot put all your money in speculative assets like gold, silver, cryptocurrency, collectibles, antiques, whatever it is. You have to put some money away in a dominant portfolio that is income producing and, hate to say it, geared toward either real estate or traditional assets. You have to have some exposure to those markets. Now, for those of you out there that just like to speculate on Bitcoin, or maybe you're an investor that says, Sean, it's all bullshit. They're never ever going to regulate Bitcoin. They're not going to regulate cryptocurrencies in general. If you want to put 1 to 5% of your entire portfolio's value in cryptocurrency and or Bitcoin, be my guest. If you have a $100,000 portfolio and you have 2% devoted to Bitcoin, that's $2,000. Is it really going to matter much on a large enough scale? Assuming you are continuing to grow that portfolio, meaning let's say that you get to the point where you have $200,000 invested in traditional assets and you want to dictate 2% of that portfolio to Bitcoin. Well, that means you're going to have $4,000 in Bitcoin. As long as you're comfortable with that risk over the long term, you do you. Now, I know the speculators that are watching this are going to go, Sean, you don't get it. I just buy it when the price drops, then I sell it when the price goes up. Look, if you want to speculate in these markets, I'm all for that. I speculate in a lot of these markets. But at present time, I am not touching Bitcoin. And the reason being, again, I am too scared at some point the government is going to come in and they are going to regulate it. So I would rather not be involved in this market at all and just go after traditional assets and also the assets that I have exposed to the antiques collectibles trade. I do own some gold and silver. More on that in an upcoming video. I do not recommend that people invest in gold and silver over the long term either. Again, more on that in an upcoming video. But overall, Bitcoin and cryptocurrency is not for me. I hope you enjoyed this video. I hope you got something out of it. I will state this video was geared to be controversial. So hopefully it did stimulate you in some way, good or bad. Let me know in the comment section below and have a great night. Thank you.